if there's enough interest in here. So I've got my laptop right in front of the screen here, and I'm going to have a look at some of the comments. I'm not going to pick on them in any particular order, and I'll answer a few of the comments that pop up here, and anything that pops up on live chat as well. Somebody says your office is reversed. I'm guessing that's because the camera's facing this way. But it looks like people are receiving it. Yeah, everything seems to be okay on here. So actually one of the comments I've got here is, how do I join the live stream? Because this is the first time I've done it, I imagine everybody's getting an email. When we tested it in the week, everybody was getting an email and so on from there. But been busy trading today. I've got the football on in the background here. I'm not trading football because I'm going out this evening, and I wanted to do this live stream and test it and get that out of the way. So I've been just trading the racing this morning and doing some work on the tennis. And today on the racing was fine. I say fine, it was just an ordinary sort of midwinter day. I think I had 3 losses, perhaps 4 out of all the markets that I traded this afternoon, but I didn't get any spectacular results. It was just plodding through the card, trying to do the best that I could at any one particular moment or another. So it wasn't a stunning day by any measures, but it was about what I expect at this time of year. It wasn't any better, it wasn't any worse. It was fine. Tomorrow I noticed there's a meeting cancelled, so I'm not trading tomorrow at all, and may have a look at some of the other stuff. But I've been busy working on tennis this week, so I've spent a lot of time this week going through all of the tennis stats and reappraising everything and just getting my mind back into gear to have a look at the Australian Open next week. So I've spent a lot of time going through all the individual stats. Let's have a look on here. Let's answer some of these questions on here. Okay, first question is from Ian on here, and it says, for me, the biggest question is, how do I read pre-off markets and what stakes do you use per race? When I stake on a race, it will go up and down all over the place. So you'll get a different answer depending upon what stage of the career you're at. When you're first starting out, you don't really want to use very large stakes. So typically people tend to use small stakes and use the same stake in every individual market. So the problem you'll have with that is depending upon what type of trade you're doing. So for example, if you're scalping, you would expect to get very small percentage returns on that stake. So if you're using small stakes, you're going to get absolutely tiny returns. But if you're trying to catch a trend in one direction or the other, your returns will be a little bit higher. But not all markets are suitable for one style or another. And by using fixed stakes, the problem that you'll have is if you trade a favourite or you trade something third down the card in a horse race, you'll get very different returns based upon trying to get in or out. So it's better to have a staking method or process that allows you to adjust your stake according to what you're trading. So if you look on BetAngel, we have the auto staking box up on the top right that allows you to adjust your stake. As you increase your stake over time, then you get into this mode of operation where you really want to be able to use the largest stake that you possibly can. So for me, personally speaking, what I tend to do is I have certain amounts of money in my account, and if I go into a race and I'm really confident, then the stake goes up and I increase my position within the market. But if I'm feeling really not very confident, then the stake goes down. But I generally do start at the lower end and build my stakes up. But you'll be surprised what you can earn even using small stakes. So on the blog recently, you should check it out. I sat down with my daughter over Christmas, who was back from university, and we were trading with a bank of about 450 odd pound, 430 I think was where we started. And in fact there was a video I put up on YouTube the other week about it as well. And you'll be surprised how much you can put through even with a small bank, because very often you're not doing it just once, you may be doing it twice. And also I tend to be a little bit more aggressive. So if I've got a 500 quid bank, I can max that out, because when you're trading you should only ever win a percentage of the profit or lose a percentage of that particular bank. You should never put yourself in the situation where you're going to lose a big chunk of it in one go, because that's called gambling. And when you're trading, it's much more important to manage your risk by basically saying, is it a good trade? Do I feel comfortable with it? Should I expand the trade? Should I be really aggressive on it, or am I not sure what's going on? And then you change your stake according to how that goes. But if you're working on fixed stakes, there are slightly better places to be in the market than others. But when you trade on fixed stakes, you'll find that your return per stake will rise and fall dramatically. So it's better that you actually stake according to a specific plan, and that generally tends to be around the odds at which you're trading. I can have a look down here. I won't be able to answer all the questions, but hopefully we're going to be doing more of these. There's a good question here from Christopher, or Chris, depending upon how you prefer it to be called, which says, do you think that horse racing will take off in the US as it does over here? That would be great. And I must admit, for quite a few years I've been waiting for it to take off, basically, and it never has. The US is a funny place in that it's really a number of different countries within a continent, as opposed to a continent, so a country on its own. And everybody has very different views there. It's very difficult to reconcile those. You see it in American politics, you see it in legislation, and different policies that run from one state to the other. As you know, I've been across to the US backwards and forwards for a number of years in previous jobs and what I do now. And I think structurally horse racing is very different over there. So there's no unifying body typically that can look after all racing. Sometimes people own individual race courses, and I mean, I suppose it's a bit split like that in the UK, but what I'm trying to say really is it's much more fragmented in the US, and you see that in the markets as well, because one of the disadvantages on US racing is you seem to have random start times. It could start 5 minutes ahead of schedule or 10 minutes behind, but part of that is because it's such a big country. You know, it's a 4-hour time difference from one side to the next, and that makes it a little bit harder to trade properly. So I think if things begin to catch on, that would be really interesting, and I must admit, it's a huge market, so it'd be great if it would catch on. But whether we have the right model for that at the moment or not, I don't know. But all the time that opportunity exists, I'm going to keep knocking on the door and seeing if we can move that forward. So I've been speaking to Betfair US for quite a large number of years, and they've had 3 different CEOs in the time that I've been speaking to them. But of course they did make a little bit of progress in New Jersey, and hopefully that will just push things further forward from there. But it's always a chicken and egg syndrome, as competitors to Betfair will attest, in that if you don't have the liquidity, people don't tend to use the markets, and if people don't use the markets, you don't get the liquidity, and so on and so forth. So it'd be nice if it gains some traction at some point, and I'm hopeful that it will do, but I think it may just come out of the blue. That's the feeling I get, that somebody new will come along, a different concept will appear, and somebody will jump on it and take us off in a different direction. But at least we're making some progress on there. A few years ago it looked like there was never going to be any progress. There's a lot of discussion at the moment about whether Trump will influence that or not. We'll have to wait and see, but I think if anything does happen, you're going to be looking at how each individual part of the US chooses to approach that. The East Coast is very different from the West Coast, which is very different from the Midwest. So I think it will fragment itself along those lines, and some things will bear fruit quicker than others, and some things will never happen, based upon conversations that I've had when I've been over there. The anti-gambling rhetoric is quite strong in certain parts of the country, and therefore there's going to be a lot of resistance from there. It would be great if I could have some influence on that, but I can't buy votes, and I don't have money to fund political donations, so I can't do that. All I can do is be an evangelist for it over there and try and tell people how wonderful exchanges are, especially when compared to existing models that are out there. Let's have a quick look at some of these others. I'm going to have a quick look and see if anybody's been saying anything on here. Yeah, we've got a few questions on live chat coming through, so let's see if I could... There's one on here actually talking about the football stuff that I've done, and I do note that there have been a couple of questions on this on the video itself. I think that's better dealt with a separate video, which I'll do at some point. Let's have a look at some of these questions that are coming in live now. Some of them I understand, some of them I don't, and if I don't answer them, don't feel it's a personal insult to yourself. There's a common question here: is it possible for somebody new to sports trading to make a full-time living, etc.? It's like any other job. In all honesty, I think that we've never pushed this as a business opportunity. I know some people do push it as a business opportunity, but like any other job, you have to work at it, and it's certainly possible because there was nobody doing it when I started, and there are loads of people doing it now. But like anything else as well, you're going to get people that are well suited to it and people that aren't. Very often what tends to happen is some people do this as a hobby, and then that gets more interesting, they earn some more money, and then it progresses from there. And I think that that's probably the best way to do it. Do it while you're doing something else, and if you find that you have an aptitude for it, then you take it up another level. It was very different from when I started because I had to make it work. I just took the plunge because I felt there was an opportunity there, but the market wasn't ready for me at that particular moment. I had to figure out how to make that work for me, and I did. But one thing that never changes is people were very skeptical then, people are very skeptical now, and I've just realised that that's just the way it is. You can't change people like that. It's, people believe whatever they want to believe, and it's up to them to do that. But I'm just going to carry on doing what I do best. What's your best? I'll answer this question because it's related to the Australian Open. What's your best? What's your main technique on tennis? Typically on tennis, you're looking for a break, basically. So you'll have a window of opportunity of a set or X number of games, and all of those things, and where you're looking for the opportunity for the break to occur, because if the break does occur, then it's going to move the market by a fair chunk. So I basically will go into a market in the anticipation that a break will occur. I've actually been working on it this week with one of the guys in the team. We've been looking specifically at the Australian Open and looking at the variation of that to normal tournaments or overall tournaments. But what you would typically do is you take a position, anticipate that break's going to occur within 3 to 4 games, and so on and so forth, and then hopefully it will. But if it doesn't, then you're out of the market and you start looking for another opportunity. So typically you're just hunting for breaks of serve over a particular period within a match, and some periods are better than others, but I suggest you use Tennis Trader to look at that. You'll understand how it works. If you look at the set matrix, you'll see that the middle line is if there's no break, the line above is if there's 1, 2, 3, and so on and so forth. So you're going to be meandering through that set matrix, and that's how you typically set up a trade. You look at a particular match, you would identify where the odds are going to be at a certain point, and then you identify at that point that you're going to be looking for a break, and you'll take action on that based upon what you expect to see within the match. But that you'll frame it in that manner. You'll say, I'm looking for a break, it's going to occur within this period, and then you open your trade and you close it either when the break occurs or if it doesn't. But you have to adapt to strategy. You have to go in with a specific plan of what you're trying to do. Now if the player gets injured or something unusual occurs, then obviously that's going to change the plan completely, but that you typically go in on that basis. I'm just going to turn the telly off in the background because that looks distracting. There's been a goal scored somewhere. There we go. Another question here. When judging a horse's price pre-off, to what degree do you consider the weight of money in either direction when coming to a decision? Well, curiously, I've always been surprised that there's been this debate about whether weight of money works or not, because I have actually used weight of money for a number of years. And it's just part of a number of indicators that you should use to figure out what's going on with the market. All you're essentially trying to say is, is this horse being backed or is it being laid? Typically in every market there's a horse that is favoured. So you're trying to identify if that horse is favoured, and you'll use every single indicator that you can to judge that. Now, there are some indicators that are better than others, but say you have a list in your head of all the things that you want to see. Is this happening? Is that happening? Is this doing that? Is this doing that? What's happening to this other runner? And so on and so forth. And you score that. And if you've got a 10 out of 10, then you just, boom, you do that particular trade. But if you've got a 3 out of 10 and it's dropping to a 2 out of 10, you may just not trade at all. So you're going to score each of the things that you're looking for within that list, and then you apply that to the market, and you're looking for those factors to line up. And if your confidence in your trade is high, then you use more money and you trade a bit more aggressively. But if your confidence is low, then you just play defensively, and you may not even do anything at all. And I do look at weight of money, and weight of money can be manipulated and distorted, but over the long term you tend to find that the distribution of money in the market is eventually going to reflect what happens to the price. So it is an indicator that you can use to give you a clue as part of an overall mix of what's going on in the market. But I use charts quite a bit, and I use that for identifying opportunities, getting a feel for what's going on in the market, and then focusing in on that. So yeah, hopefully that's answered that question. Do you think that in a slower market like football, it's harder to beat the market with trading? I guess that depends what period you're talking about there, because football pre-off is very slow, and there isn't much price movement, but that's actually an advantage depending upon how you're trading it. The thing I would say, if your definition of slower market is liquidity, then it is harder to trade a lower liquidity market, because getting into a market is very easy. It's getting out that really should be most of your worry. If you are in a market where there's not much liquidity, then what tends to happen is that you can establish a position but you can't liquidate it, and that puts your position at risk. So the amount of time you're in the market is a measure of risk. If you're in the market for 2 seconds and you get 10 grand filled, fantastic, that's a great trade. But if you're in the market for 10 minutes and you get £200 filled, that exit position is at huge amounts of risk. So lower liquidity markets, where there's low fill rate and not much is happening, increases the chance of you having a bad trade, because you may be able to gain a positive trade while you're in that market, but when it goes wrong, you want to get out just as quickly, and it's going to be heavily skewed to not being able to get out a fair price. You're going to have to start taking out other people's prices, and that will influence your trade. Michael says, do you trade every race or do you leave a few out? If you look at today, the races were quite nicely lined up. They were coming in one after the other. There weren't many delays, so that enabled me to trade quite a few. However, there were a few races where I looked at the race in front of me and I just thought, I don't really know what's going on here. So when that happens, you just drop out. You don't trade them at all. You decide that you're not going to do it, and that's actually a good risk management tool. I turn up to market and I say, right, what I'm looking for is the following, and then if you don't see whatever you're looking for, then you just don't bother to trade it. Now, there's quite a skill in being able to read a market particularly effectively in terms of being able to judge exactly what's going on within the market. But if you are starting out, you're trying to build your confidence, then just stick to one strategy. Just say, this is what I'm going to do, and you don't know if it's going to exist or not within the market, but you say, this is what I'm going to do, these are the things I'm looking for, and then you start looking for it, and that will probably improve your percentage. So you say, I'm going to back the favourite if it's steaming, and then you look at the next market and you can't see that the favourite's steaming, and so you don't back it, so you just ignore it. And then over time you can just start to develop and improve your strategies as you go forward. So it's, I'm fortunate in that, because I've been in the market so long, I've traded nearly 180,000 races now, that I can look at the market and I get an almost instinctive feel for what's going on. But basically what I'm trying to do is figure out if something's being backed or laid, and then looking for evidence of that. So my confidence will rise and fall, and if my confidence isn't high, then I won't trade it. So there were a few races today that I didn't trade. If we go forward to the middle of next week, that it will probably be weaker markets, and there'll be quite a few that I don't understand and where I don't feel I can take risk. So generally I'm quite a defensive trader, in that if I don't see an opportunity, I just do nothing. I just sit there and wait for one. And that's typically a good strategy. Is if you can't see anything, then your trade probably doesn't exist. There's a good question here from Joe Blogs. If you and thanks for the positive comments that are coming through as well. Would you make most of your daily profit on a few races, or much more spread out? So typically my profits are quite well spread out. I was thinking of doing a blog post on this to show you how spread out the profits can be. So I go into every market with no idea of what my target is or what I'm going to make. I just trade what I see in front of me. So generally you'll get bits of profit on each individual race. Some of them may be better than others, and so on and so forth, but generally it's very scattered and random. If you look at some of the P&Ls, And it's like plus 15, plus 20, plus 50, and 150, minus 30, minus 5, plus 20. And I'm going into the market trying to establish a safe position, and sometimes I get a nice payoff and sometimes I don't. But more important to me is to protect my bank and not make any stupid mistakes. So very often I'll go into a market, try something, it doesn't work, and I just dump it. Now, if you look at the P&L over certain periods, so like for example on a Saturday, Warwick was the feature meeting today, so I knew there'd be a bit more money there. So my results at Warwick stood out a bit more than anything else. So my P&L can get lumpy during big race meetings. If we go forward to Cheltenham, I could get a 500-600 or bigger result out of one of those feature races, and maybe a bit less on some of the other races, but you compare that to everything else on the card and it will be vastly different. So it tends to rise and fall according to how tradable the market is and how much money is going through it. So if you get a market with 1 million or 5 million, you obviously should do better than something that's turning over 300,000. So typically on most average days, my P&L is fairly well spread out over the entire card. But when there are big races on, then it tends to get quite lumpy. Clive says, can you show your screen setup? What I'm going to do is I'll test the live streaming tool that I'm using, and maybe at some point in the future we can start to include other elements on the live stream as well, but that's a bit too much of a leap for me at the moment. It's a miracle we've got this working in the first place. A couple of people have asked questions that I've answered already. There's a good one in here about today actually. There was a large backer in the market at Lingfield, and I mentioned it actually on Facebook / Twitter, where suddenly this guy appeared and just started sloshing money around. To be honest, there isn't an awful lot you can do about that unless if you can understand what this person's doing. So every now and again, if you go on the forum, there's the Mad Bomber thread and the Crazy Layer and various other things. But if people on the forum, including me, spot activity that seems to have a pattern to it, we'll often post it up on the forum, and you can look at what's happened in those threads in previous races. But at Lingfield today, there was one race. I'm trying to remember what it is. It's a shame, I've got the charts and stuff for it, but I remember seeing that large order come in. And as soon as that large order came in, I just hung around for a little bit to see if that was followed up, or whether it just started to rebound and recover. So what I did at that point was started to weight my position to the price coming back in again in case this guy returned, and he did. So the price jumped in again, and at that point I started to take a bit of profit, and then he didn't reappear, but it was fine because I'd taken most of my profit when that second spike came in. Now the problem is that now and again you could be on the wrong side of that, but I've learned over a long period of time that it works both ways. Sometimes it goes against you, sometimes it goes for you, but over the long term it more or less averages out. So your mission, should you choose to accept it, is to see if there's a pattern within that. And there was a pattern certainly at Lingfield today. That sort of, I didn't think Lingfield was a great market today. It was okay, but when that guy came along, it was possible to pick up that there was a certain style of activity behind that. But it could be anybody. It could be just somebody with a lot of money that fancies this horse and just fancies $5,000 on it. And in the weaker markets, this is more likely. If you look at the amount of money above and below the current touch price, you could clean out a big chunk of that with just $1,000 or $2,000 in some of the weaker markets. But it's much less likely in some of the stronger markets where there's more liquidity going through. So you're much more likely to see that on an all-weather race that doesn't have much prize money than you would do somewhere like at Warwick today. So it wasn't a surprise to see that guy turn up and to see the market acting that way today. This is a common question from Richard, who says, how long do you think a novice tracer takes to be good enough to be full-time? I actually think that you almost need a year in the markets to be able to get a grip on all of the things that could possibly happen. Whoops, almost destroyed my laptop then. So, at this time of year, for example, in February, the market's quite quiet. I wouldn't expect to get anything astonishing at this time of year, but as we move through to Cheltenham and then Aintree, the Guineas, the Derby, Royal Ascot and so on, it's very likely that my expectations will rise dramatically. But at this time of year, your expectations should be a bit lower. people often struggle at this time of year because the results really aren't coming through, and they begin to doubt whether it's them or the markets. Well, I can tell you almost certainly the markets. So the problem is, unless if you've experienced a whole year of that cycle, it's very hard to come to terms with. You begin to get a bit of self-doubt creeping in. And if there's one thing I've learned about trading, it's that confidence is key. If you get confident, then you can achieve pretty much everything. But if you lack confidence, then it can eat you. It can destroy you and force your hand in situations that you don't want. So yeah, I think it's some people, if you look, there's been people who I've become aware of, or I've either taught or are BetEdger users, that just pick it up like that and are marvellous. They just get it straight away. But there are some people that have to go through a lot of toil to get to the stage where they become consistent. But I can assure you, most people, and the majority of people, will be inconsistent for a period of time. And that's just the nature of trading. It's very hard trading is naturally counterintuitive. You tend to be making decisions that don't make any sense. And I know that sounds a strange thing to say, but if you look at tennis, for example, if somebody's a break and a set up, then their odds will be incredibly low. But from a trading perspective, that may be a great point at which to get involved in the market. But everybody is saying, oh yeah, he's sewn this match up, and therefore there's no point in doing anything from this point onwards, or he's won. And it doesn't take much. If you play tennis, or you have played tennis, you can be 3-love up. You try a couple of crazy shots, you end up losing the game, and then the other player serves, and then suddenly it could be 3-all if you don't serve out this game. So you suddenly realise that in fact it can swing around quite dramatically, and the best trades that you can always get are the contrarian ones. You see a steamer coming in off the charts and heading down to much lower values, and if I've caught that, then that's great. But if I haven't caught it, I don't jump on that trend. I'll just sit there and think, right, I'll wait for that to bottom out. I'll wait for evidence that that is bottoming out. Sometimes it doesn't, but you look for evidence that that's about to occur, and then you jump into the market at that point, and guaranteed that that's one of the best points you can get, because the market can go flying off in the other direction. And therefore, the best type of trades you can do are the ones where you're going to look the stupidest if it goes wrong. But you learn that that's actually one of the things about taking risk, is that you need to take risk at the point at which the payoff is huge, but the downside is generally quite small. So that's, trading can be quite counterintuitive at times. Let's have a look. Do you think BetDAC is a little more jumpy than Betfair? Yes, is the quick answer to that. And that's due to less liquidity. But in fact, the BetDAC prices track Betfair prices pretty well. And BetDAC is tradable, and certainly at some of the bigger meetings, it's very tradable. So yeah. Do markets with similar starting odds class repeat themselves? Yes, they do. A quick answer to a quick question. Why is Betfair trading considered gambling? Because it's to do with sports and betting. It's I mean, essentially the sports trading market is like the spread betting market in financials, but in fact in financials you have to pay quite a wide spread, and you don't in sports. So it's much more favourable in terms of your average Joe, the likes of you and I, to be able to do something interesting in sports markets, and it's a bit harder in financial markets. But yeah. Somebody said, are you going to do anything online for people who aren't based in the UK? Yes. Here's a quick one. Chris has asked a brilliant question here, actually, which is, did you doubt yourself when you first started out trading? Yes, is the honest answer. And I think everybody does. There's this sort of initiation you have to go through if you trade seriously, where you do immediately start to doubt yourself, and you do wonder if you're doing the right thing. But again, that's related to trading. The funny thing is, the human mind is set up to weight the risk of failure much more than the risk of success. So it's natural to feel that way. And this was one of the biggest revelations for me in my whole life, actually, not just trading, was understanding that that is the default mode that people have. It's very, very easy to be negative. I could tell you a million negative things about anybody or anything. And that would appeal to a lot of people because that's generally what people are looking out for. People, it's a primeval, primordial almost response to the way that the world works and the way that your brain works. And naturally, self-doubt does creep in. But over time, you begin to eliminate or understand that that's not a logical response. And I'd say that that's actually probably the biggest leap that I've ever made, is going from being somebody that doubted what I was doing even before trading to somebody that's very confident about what they're doing. Nothing is a problem really, and I have no fear any longer. And yet when I was growing up, I feared everything, I think. And my first attempt at trading short term was on financials, and I was rubbish at it. I just couldn't get that thing together. But when I started trading short term on Betfair, it suddenly clicked and I managed to make that transition. So it's important to be confident, not reckless, but it's important to be confident with what you're doing and why you're doing it. But the problem is you will get told every step of the way from the first day that you do it. I mean, it's happened to me from the first day I started to now. People will call into question what you do, and you know, that just seems to be the way of the world for some reason. But overcoming that and understanding that that's somebody else's issue and not yours is pretty key. So when I first started, obviously I was in a different era as well. I didn't know anybody that was doing it. Everybody thought I was mad, but it felt like an opportunity to me. And the more I did it, the more opportunities I found, and it completely changed my life. So that taught me a valuable lesson that it's an irrelevance to me what anybody else thinks. I just do what I know is right and pursue it. And I do that right across my entire life now. And it's really made a huge difference in terms of what I've achieved, the people I've met, things that happen. You just realise that, in fact, the majority of the world doesn't think like that. And that is actually an edge in itself. I'd say that's probably part of the biggest edge you can get as a trader is re-educating yourself to be able to think like that. And probably psychology, from a risk-taking perspective, whether it's financial, your life, trading, sports markets, is actually, getting that right mindset can make a huge difference to you. So everybody has self-doubts. I did when I first started, I don't now, but it's quite normal. It's a perfectly natural reaction to what you're doing, and especially taking risk. There's a good question here, actually, a relevant question, which is why I'm answering it. We've got lots of questions, actually. There are a huge number, so I'm sorry if I can't answer all of them. But I know I'm going to get a call from the missus at some point. But where do you think the better opportunity to make money, horse racing or tennis? It depends what you want to do, because I've always traditionally made most of my money in horse racing. And the reason that I like that is because you can dip in and out of the market at regular intervals, and there's so many of them. So if you have 4 race meetings with 7 7 races on each of the cards, then you've got 7 by 4, so you've got 28 opportunities over the course of the day. And I don't look at that as saying, how much do I need to make? I'm just thinking, well, I've got 20 opportunities. Even if I made a tenner on average, that's still a reasonable amount. Whereas when I look at a football match, for example, I look at that and I think, well, that's 90 minutes, that's 10 races effectively. So I'm always making that judgment about what should I focus on, and does one want more sense than the other. So that's why I've done horse racing. But horse racing is a little bit harder to master than, say, a tennis match, because tennis match is based purely upon the score and the amount of time left towards the end of the match. So you can get some really good tennis matches that will produce spectacular results. But I think some of it, it's important to be engaged in what you're doing. So if you're into tennis and you understand tennis quite well, then it can be quite good to be able to understand what's going on in the mind of the player that's actually playing. But what I tend to do is, depending upon the time of year, I'll flex in and out of different sports. So the Australian Open next week, I'll focus a bit of energy on that, simply because of the time difference. That allows, sitting down first thing in the morning and doing something will be quite interesting to me. And then I can fill in with horse racing in the afternoon and maybe a bit of football in the evening. But that's how I tend to judge it, is each on its own merits, really. But different people have, sometimes knowing a sport too well can be a burden. So I know lots of people who've come over from gambling on racing, but they struggle to trade because they put too much emotional emphasis on what they're doing. I've seen people say, the price on this is coming in, that's ridiculous. And I'm saying, well, it's coming in, people are backing it, so whatever your opinion on the horse itself or how it's going to run or whether that's ridiculous or not, it doesn't make any difference. It's a bit of an irrelevance, really. There are so many questions in here. Some of them deserve a video in their own right, but Nick says, how significant would you view Mark Douglas trading in the zone in relation to racing markets? Here's a surprise for you, I've never read it. So it's not a book that I've paid that much attention to. I tend to obsess myself with other things. So 2 books that I've been reading. The number 1 book that I would recommend is Thinking Fast and Slow by Daniel Kahneman. That's a transformative book. It will change the way that you think forever. But if you want a lighter read, I'm reading The Idiot's Brain at the moment. And I sort of gain my inspiration and insight into those sort of books, really. I think the best thing that you can do in terms of understanding how a trader thinks is to find a good trader and to watch what they do, ask them questions, and really get a deep understanding of it, because there's a big difference between somebody who actually does it for a living and somebody who writes about it. And I never really, I picked up a copy of it and a PDF or a Kindle or something, I can't remember, but I never really got far into it because it just wasn't resonating with me at all. And I think perhaps I've gone past that already, I don't know, but it's not something that I've ever looked in great depth. There are a few good things out there, but I think that if you I've often wondered how you would end up buddying with other traders and whether that would be a decent way forward. But find somebody that actually really honestly does it and see the way they behave, react, and their all of those things around them, because then you'll learn a lot from that. So I tend to seek out individuals. So if I see somebody that's successful or somebody that I'm really interested in, then I'll often write to them or phone them or get some dialogue going and just ask for 5 minutes of their time or something. And I've learned more by doing that than anything else, because you begin to get underneath and understand what's going on from a broader perspective. So I think that's quite important as well. Somebody said the system has just crashed. Can you show us what you do for backup? Well, what I do for backup is right here, actually. So and there. So I have a laptop sat behind me. Maybe I'll do a video on it. I'll turn the camera around for once and point in the other direction so you can see what's going on. But I actually have a laptop, and that's connected to a 4G connection. So if there's a problem at any particular point, either with the power here or my machine just blows up, I turn around and start trading immediately. I'm just browsing a few more questions here. And another good one about when I started out, say, did you struggle with your own discipline? I wasn't too bad. I would say right at the very beginning, it was tough, and I made all of the classic mistakes that everybody else makes and that you will make. So I wasn't, It was funny actually, because the first market I ever traded or did anything on was golf, rather bizarrely. But because I was trading financials short term at the time as well, I started doing the FTSE up and down market. And it was when I strayed off into other sports that the discipline started to go, because I didn't really have an appreciation of what was going on. If you look at racing, you find that the price starts here and finishes there, but in between it can do this. So you have to see through that and trade, that broader pattern. And that helps you. Sometimes actually trading at random will help you a lot, because you'll realize that a lot of your trades ended up positive anyway, and then it was the fact that you cut it out halfway through that caused the loss. So that will help with your discipline. And I know it sounds funny to recommend trading at random, but you'll learn that actually a lot of the time it can be very effective. So yeah, that's very often worth doing, just so that you can get a bit of a handle on where you're going wrong and bring up your discipline. Will you be at Wembley if Southampton make it to the EFL Cup final? Sure will. We will hold a mini get-together of BetAngel users if Southampton get to Wembley. Not convinced about the return leg at Anfield though. Is it all strictly trading that you do, or do you ever have a flutter now and again? Well, the funny thing is, when Betfair introduced the higher rate premium charge, I started to deploy gambling strategies to increase the amount of commission that I was paying, because I wanted to play around with strategies that would help me overcome the new charges. And when I was doing that, I figured out that there was actually a couple of positive strategies to have from that. So I do run value-based strategies, but I don't generally put up any results from that, because the equity curve is all over the place. It generally goes up, but it's all over the place. But there is an edge, because the market's so efficient in terms of pricing, and the book percentage is so small, and the variability is so high in the market now. There are value opportunities there if you're looking for them. I hint repeatedly on Twitter about those value opportunities. But I don't have an outright flutter. I never do. It's almost impossible for me to do that. It's quite embarrassing sometimes. I've recounted this story a few times to different people, but I was invited to a Champions League match, and at half time they wheeled me into the hospitality and we had something to eat, and they said, "Oh, what did you think of the first half?" And I'm saying, "Oh, well, they had 5 shots on target, they had 2 corners, they had a lot," and they said, "No, did you enjoy it?" So you end up getting into this mindset where it becomes almost impossible to have a flutter. And my definition of having a flutter is somebody bets on something to win without taking account of the odds. So no, I don't flutter. Thanks, Philip, for telling me that Burnley just scored. Can't believe that. Are there any races you avoid, says Tom? And I will answer Tom's question because we have a lot of dialogue here. Typically, I don't like small field, short price races. You can trade them perfectly effectively, but my strike rate on those is quite poor. So I obviously have an issue with those, so I don't tend to trade those types of races. But also the first race of the day, if you look at the first race of the day, it's got many hours for the money to arrive, and it arrives in a higgledy-piggledy pattern that doesn't really make much sense most of the time, and you have a position and then it suddenly moves against you because there's no money in the market. So typically the first race of the day I watch. I may attempt to trade it, but that is the worst race of the day for me, the very first. And generally as we go through the card, I get better and better, because if I'm trading, like Warwick today, Warwick had most of the attention today from a racing perspective. And I traded the first at Warwick and thinking, yeah, this is going okay, I can understand this. Second race, it's like, yeah, I can definitely understand it. And then by the third onwards, I was really going for it. So yeah, typically my worst race is the first race of the day, because it's harder to read, because the money's coming in much slower and much more randomly. And I get better as I go through the day. There's quite a few questions here on charts and charting and stuff, and I think that deserves a different video and discussion altogether. So I'm not ignoring those questions. I just think that it's a complex subject and something that probably requires different attention. Question on live feed on football. We're looking at that at the moment. There's a great question here. Do you ever trade using other software? No. I mean, the thing to remember is that BetAngel was created when there was pretty much no software. And if you look at the upgrade path that we keep pursuing, you can see we're still working hard at trying to figure out what's next and what is the next opportunity we should pursue, and are there sports specific things that we can do. So no, and also you get used to things, don't you? I accept that people use whatever they're familiar with, but yeah, no, there's plenty of stuff for me to get on with there. Which market do you prefer to trade on, football over and unders or correct score? I prefer over and unders, but I know people can pursue, if you look at over and unders, it's a derivative of the correct score market. So If you trade a correct score, you're trading effectively over and unders perhaps, or if you trade over and unders, you're trading effectively the correct score. It's a slight variation, but depending on how you want to do it. Ian asks a very good question, which is, do you have a set amount you're willing to lose on a race and stop after that, or do you trade as opportunities arrive? It's the latter. I don't go into a market with the anticipation that I have a preset loss that I'm willing to make. The only thing I would say is, if you look at when you're actively trading, there's a certain tolerance to whether your position is good or not. So if I've got maybe 5 things I'm looking at and all 5 are intact and I'm in a loss-making position, I don't change my mind. If all those 5 positions are intact, the trade is still on, regardless of how much I lose or am losing at that point. There are times when it gets uncomfortable. If a position goes against me, then naturally you feel uncomfortable. Sometimes I make the odd Horlicks of a race. Sometimes I just get it completely wrong, and that feels uncomfortable. But I don't have a preset amount. It's all down to what's going on in the market, the outcome. I've just learnt, actually, the best way to answer this is I've learnt over the very long term is if you're going in for the right reason and you're managing your position correctly, then everything generally works out over time. And it doesn't and shouldn't be guided by how the position is at any one of those particular points in time. If all those things are intact, your trade will generally work out over time. Just because it's temporarily wrong or the market's gone against you is the correct word to use there. It doesn't mean that it won't mature to a profit eventually. Somebody said, how do you find out how many markets you have traded? That's on your premium charge statement if you pay premium charge. But if you don't, Betfair will generally give you information. When I've done media appearances, I've proofed all of my records, and Betfair have a lot of information on individual accounts that they're willing to give you if you ask for it. Anthony says, how do you tell the difference between noise and a reversal? And if you look at noise, basically you would expect the market to be noisy, and it's gradually got noisier over time. Now, if you're I was going to say a proper trader, that sounds wrong. If you're actively trading a market, then noise is generally quite favourable to you because it means you can sell the noise all of the time. The noisier the market becomes, as long as you know what you're doing and what your specific aim is, it helps if you have noise in the market, because that will shake a lot of people out while you're still in a good position. So every market has a natural range of noise, and as long as you know what that natural range is, then you can just sit there, and if it moves against you, you can just look at it and shrug your shoulders and just say, well, I don't care. But every market is slightly different, so that's something that comes with experience, and you can quantify it, but it is something that comes with experience. Another question here about charts. I think I'll save the chart ones until a different session. Maybe we focus specifically on one thing. Do you prepare in the morning? Generally not. I'll look at the card in the morning, so I'll nip over to Racing Post, or I'll browse there's a few recommendations on the forum of sites you can use to look at the card, and that just gives me a feel for how the day is going to play out. But if you look at the card very early on, there can be withdrawn horses or changes in the card as we go through the day. So generally you can't rely upon that specifically. So I turn up around sort of half an hour to an hour before I sit down to trade, and I'll spend a bit of time having a look to see if there are opportunities or if there's something unusual going on. So yeah, first thing in the morning I'll have a quick nose, see if there's anything really odd happening, but generally I won't turn up until about half an hour before, and then I sit down and actively trade. Somebody said, I missed the start, is this a one-off? Hopefully not. We're just experimenting. I wanted to see what happens with this and how it goes, and hopefully we can, it's all going to be down to what schedule I've got and where I am and what I'm doing. but hopefully we'll do a few more of these. So. Somebody says, swing or scalp, do you prefer one more? The markets have got more swingy over time. So you tend to find yourself looking for trends more than I used to. Whereas when the markets first started, they used to be more scalpy. Somebody says, I trade equities for a living. I'm a technical trader. Would you say technical analysis can be applied to pre-race strategies? Sort of. I think if you've traded short to medium term, then sports markets are like the stock market on steroids. So speed everything up 100-fold, and that's what you're looking at pre-race horse trading. So you have less time to make decisions. The problem with technical indicators is that in a racing market, all odds are related, and in financial markets that's not necessarily the case, so they don't work as well. But nonetheless, if you're a technical trader, I trade order flow. So if you've traded order flow or some other type of method like that, then that can work fairly well. Somebody, Kevin, I'm assuming from the username, says, would you say scalping is a bit pointless for most weekday markets? If you're looking at the all-weather flat in winter, you're going to struggle. It's probably the best advice I can give you there. Even if you do scalp, you're going to have to inherit a direction. So if you can understand the general direction a market's going in, you can still get away with doing scalps without taking too much of a loss, but you're going to have to insert a bias in it, a very, very strong bias, because that's the way the markets tend to work nowadays. Somebody says, do you find off racing markets a little more predictable during quieter times? If you look at the markets in general, there are some days of the week that are better than others. Some people hate Saturdays. I love Saturdays. I wouldn't give up a Saturday for anything. In fact, a few years ago, a friend of mine had his wedding arranged and notified me that it was going to be on a Saturday. And that was a disaster for me, because it was like, do I trade or do I go to the wedding? It all worked out in the end anyway. But it's very, very rare for me to miss a Saturday, unless if it's something really important. So, I love Saturdays, and those are my favourite days of the week. Pretty much guaranteed to do a good day on a Saturday, and other days of the week, not so much. So if you look at different days of the week, they will exhibit different characteristics. And Mondays can be pretty weak, but they tend to be quite strongly trending on a Monday, for example, and you may not get that on a Saturday. But yeah, different days of the week do produce different characteristics, so you'll probably find that there are some days of the week that you really like and some you really hate, but that's quite normal. How do you deal with a streak of losses? It's funny actually, because I would love to say it doesn't affect me, but you get this feeling behind the back of your head when you've had a string of little losses, and it does affect you. So I went on this epic journey once to try and avoid losing money over a huge period of time, which I achieved, but it really began to affect the way that I was trading, so I was deliberately trying to avoid losses. And typically when you get a string of losses, you end up doubting or toning down the opportunity on the next race, which you absolutely shouldn't do. But I tend to get a little bit defensive and get a couple more positives through, and then start moving forward again. But generally, a string of losses for me, it's not unknown that maybe I'll lose 4 to 6 races in a row when I'm having a particularly bad run, but typically that's not the case, and that's quite rare. So part of being able to manage the ability to cope with a string of losses is to measure effectively how often you win and how often you lose, and from that you can predict how many losses you should get in a row. So once you know that knowledge, you know that even just by chance, it's much less likely that you're going to have a very large number go against you at any one particular point in time. So that's how I come to terms with that. I know if I'm on a run of 4 losses, it's probably going to end fairly soon, and therefore that makes it a little bit easier to cope with. But does it affect you? Definitely. And I end up trading defensively and sometimes miss opportunities if I've made a Horlicks of the last 4 or 5 races. Somebody says, if February is quiet, would it be a good month for novice traders? It's you're not going to make. I'll make 3 times as much in the summer as I can at this time of year, and as a consequence, I think that's a positive for somebody starting out, because even if you perform really well, it's not going to be amazing, but nonetheless, if you're starting out, it's not going to be amazing anyway. So it's not really going to make a huge amount of difference. But if it allows you to build up to the bigger months that are coming up ahead of us, and you probably make all the mistakes, get a bit of confidence, and not feel under pressure from the fact that there are so many good markets around. So it's probably quite a good year to mess around and move forward on things like that. Just having a look at some of the more questions here. We've actually got far more than I can answer here. But I think probably what I'll have to do is take a snapshot of some of these questions and answer them in another live stream, and start with these other questions and start to try and consolidate some of them. I'm just having a good look here. There's a good question here actually. How do you avoid the temptation to revenge trade after a poor trade? And I smirk, because every now and again I fall into this trap as well. I've done something, it's gone wrong, it shouldn't have gone wrong, I ran out of time, there's 30 seconds left, and it all started to fall apart. And I'm actually quite good at, when the red mist descends, at being able to do a good job of it. You ask some of the guys in the office, they very much have witnessed that firsthand. But the thing to overcome this is that when you have a long-term track record, I'm very confident that I will make money when I sit down to trade. Sometimes I may not, but I'm pretty confident that I will. So if I get a bad trade at some point of the day, I just keep on plodding on, because I know that eventually that will become an irrelevance. I will end up at the end of the day. So I cope with that particularly well. I do get seriously pissed off when something goes wrong, but that lasts a very brief amount of time, because suddenly I'm focused on the next race and moving forward from there. Somebody says 2 short price favourites pre-race, best strategy. There's a video on it. If you look on YouTube, there is a video on that. Somebody says, please can you repeat the books, which I will do for you. Thinking Fast and Slow and The Idiot Brain are 2. I suggest you start with The Idiot Brain, because that's a much easier read than Thinking Fast and Slow. I am conscious now that we've been going for nearly an hour, so I'm going to answer a few more questions and then I'll tail it off. But because there are so many questions and there has been a fair bit of interest on this, what I will do is make a note of some of these questions, but we will do another one. At this time of year it works quite well for me, because the racing finishes early on a Saturday. That gives me the ability to, I usually do paperwork and update spreadsheets and stuff like that, but I just thought what we'd do today is to try a live stream. There's actually a good question here from Francis that says, I've started with automation before being able to trade manually with any consistency. Do you think this is a big mistake? Actually, I think that is actually a good move. He also puts on here, neither has been profitable. Oops. But that's fine. That's absolutely fine. Because actually finding a generic strategy that generally works pretty well on pretty much everything in a generic sort of way is actually quite hard to find. You tend to have to flex strategies. The phrase I use is that for every market there's a strategy, and every strategy a market. So being able to join those two together is the skill when trading, and then also executing is the skill, of course. But yeah, you have to find those, join them together, and then execute. But if you use automation, it can actually give you a lot of information about the market. So go into the market, trade it at random, and you'll find that generally you don't lose that much money. So then start changing it and putting a stop loss in, and then widening the stop loss, or altering the types of races that you apply it to and stuff like that. And gradually you'll begin to get a picture together of everything that's going on within the market, and that can be pretty reassuring as well. Or I know that some people use a bit of automation to get themselves into a position, and then they manually manage the position from there. So you may want to give that a try as well. Somebody's put in here, how much do you need to know about the sport of horse racing to be successful? Well, when I started, all I knew was that a horse had 4 legs and a small person on the back. That was all I knew. But I made a lot of money very quickly, even with that knowledge, because all I was trading was order flow. Okay, it's being tipped over here, or somebody's saying something here, or the form line says this, but eventually that gets reflected into the market and you trade that. And that's how you make your money. Now, as the years have gone on, I know more and more about racing, so I'm able to understand a little bit better what's influencing some of that activity. But I didn't need that to start with. You don't necessarily need it, and in fact it can be a burden sometimes, so bear that in mind. Having a quick look through here. Somebody says, have you taught the wife to trade? No, I haven't. And in fact I think she'd be useless. But I have taught my eldest daughter to trade, so she can trade, and we had this big dilemma about does she go to university or not, because I'm obviously miles into my trading career now, and I'm beginning to think about things such as what do I do after this, and when do I choose to retire, and you know, I'm starting to think through all these different things. You look at the amount of people that died in 2016, and unfortunately an old school friend of mine died in December, and you suddenly start thinking about, well, you know, where do we go from here? And so I've actually taught my daughter to trade, so that she's got the ability to do that if she wants to, but I also suggested she go to university rather than miss out. You know, I'm more confident that you will be able to trade in some capacity going forward than I used to be, because I thought it would be a very limited opportunity. It turns out it's been around even longer than I imagined. So I said to her, well, probably best to go to university, and you know, you can still trade a bit if you want to, but you know, we can pick it up again when that period of your life is over necessarily. And of course I've got 2 more children as well, so I've got 3 opportunities to get it right, but I'm absolutely want them to trade because it made such a huge difference to my life. And in fact, I think it's better that they do it now than me, really, because it will give them a much better start than I could have ever possibly imagined. So I think it's advantageous for them to do that, and to carve their own path. The funny thing is, they've said, oh yeah, I'm going to trade, but I'm never going to talk about it on social media. And I don't blame them. Let's have a look. There are a lot of questions, and here's a good one actually. I'm just flicking through them, and I promise I will look at all of these and either answer them in videos or we'll do another live stream. And somebody said in here, why do you still trade all the time when you obviously don't need to? It's true that I don't need to, and sometimes I do question the economic return of trading some of the weaker days or weaker markets. But I've actually really enjoy it, and I've learned to enjoy the challenge of trading, and that's actually part of my motivation now, is discovery, trying to learn something new, trying to take things a little bit further forward. But like I've just said, actually, you know, I'm sure it will be the kids that trade completely full on going forward rather than me. Seb says, do you think Smarkets or Matchbook will ever be viable to Betfair or BetDAC? I'm not sure. I think we need something new. We need some invigoration. Obviously competition would be brilliant. If the more competition we have, the more valuable you and I are to those people who are trying to win our business. So I'm all for loads of competition. If you look at what it's done in the API marketplace, look at just how many different types of tools are available to do so many different things. And if we had people actively competing for our business, that's going to make a huge difference. So in January, is it January? No, February. In February, hopefully I'm going to do some stuff talking about these guys. But yeah, we're planning for that at the moment. We tend to think very far ahead. And maybe we'll get a few more answers then. But yeah, you know, I'll tell you more about that as it comes around. Anthony just says, what is order flow? Order flow is which way is the price going? What are people doing? Are people backing? Are people laying? What are they doing? And trying to interpret that information rather than saying the price on the favourite is here and it's going there because he ran well at Kempton last week. The there are a load of questions actually. I've just seen how many there are. There are enormous amounts, and I'm conscious that this is going to be an hour-long session now. So I'm going to close it here. I'm sorry if I haven't been able to answer your question, but I will look to answer some of these questions directly or indirectly, either through the live stream and starting up where we left off, consolidating some questions, or doing specific videos. But I know I'm going to get stressed because I promised I would be going out this evening. So yeah, part of your trading life is to try and keep that balance there as well. At times that's a skill unto itself. So I hope that this has been useful to you. I understand that I can publish this on YouTube afterwards, so I'm going to do that for people that didn't turn up initially. And I will make a note of all these questions that have come up here, and we'll see if we can address those one way or another. So thank you very much for making the effort to attend it. It's the first attempt we've tried on this. I'm sure that we'll be able to do cleverer things as we move forward, and I'm looking forward to bringing that to you and talking to you again. So thank you very much for your support, and it's much appreciated. I get a lot of enjoyment from helping others and trying to grow you as a person as well. So hopefully I can continue that via all of the various methods that we do, and look forward to talking to you on the next live stream. So thank you very much for attending.